Good morning, everyone. Welcome to the TradeXchange Weekend Webinar. First, I want to thank everyone for joining us this morning, as well as thanking everyone for who is tuning in via some of our streams that we are producing right now. First, one thing on our mind is what a market. What is up? In our opinion, we always talk about this in the news desk, but what is up with this VIX? This volatility index the past week has had hardly any move in any visible direction. Clearly, in our opinion, something is brewing either to the upside or downside. And we think when it does come to fruition, it will be a very vicious move in these markets. We're keeping a close eye on this VIX, watching it on a day-to-day basis as volatility continues with no movement in your volatility index. For the week, the NASDAQ and S&P ended lower as the Dow Jones closed the week higher. One of the key economic indicators as of late has been the CPI. The CPI did come out last week hotter than expected, as well on the core CPI side, which continues to add volatility to all markets, as well as continued commentary from the Fed in regards to their hawkish stance. Keep in mind, members, on Thursday alone, we had over a 5% move intraday. One key aspect as well following that CPI data were the yield and, as always, the US dollar. Speaking on the yield side, looking at yields, the 10-year yield broke above 4% for the first time since 2008, ending the week above 4%. US dollar strength continuing as the euro weakness continues as well, as you'll see with one of our charts later on in our webinar. Crude oil recently in news as well, following OPEC headlines, saw weakness as traders believe an economic growth worldwide is slowing, which could affect oil prices. Members, keep in mind we are in the beginning of earnings season, as the banks did kick off earnings this past week on Thursday and continue on this week. Earnings are set for the lowest earnings growth over the past 2 years. Some of the top names for this week on earnings, we have AA Alcoa, AAL American Airlines, BAC Bank of America, Goldman Sachs GS, IBM, Johnson & Johnson J&J, Netflix NFLX, AT&T the letter T, Tesla TSLA, United Air UAL, and Verizon VZ. So we do have a pretty busy week. We have earnings, economic data, and as always, continued Fed speak commentary. It's interesting to see markets do try to get a little stream to the upside, and then we have these Fed speak come in that has lately added fuel to the fire to the downside, and markets have seen intraday reversals as Fed speak commentary continues day to day, 2, 3, 4 times a day. Jumping into your week ahead, taking a peek at your upcoming US and world events. As always, we do have your company events for the week as well on your right-hand side. Top earnings, right up top. On Monday, what we'll be watching, as always, we have the Empire Manufacturing Index. Overseas, we have China's GDP, industrial production, and retail sales. And the EU ministers are meeting on the Russia-Ukraine crisis. Tuesday on the US side, outside of Fed speak, we do have the US industrial production. Europe has Germany's ZEW survey, and Canada announcing their housing starts. On Wednesday, on the US side, housing starts and permits and the Beige Book, Fed speakers as always. On the European side, the UK, which has been in the headlines as of late. Usually we don't make that much news out of the UK, but clearly they are adding to the volatility in markets worldwide. The UK has their CPI and PPI, and Canada is announcing their CPI as well. On Thursday, we have on the US side, existing home sales, the fully Fed manufacturing index, and Fed speakers yet again. On the EU side, Germany's PPI and the EU Leaders Summit, and Japan coming out with their CPI data. On Friday, you have the EU consumer confidence flash, UK's retail sales, Fed speak, and we do have a double witching expiration. So we could see a little volatility to end the week, additional volatility to end the week. Scrolling down, we have your top conferences for the week. As always, members, if you have any questions regarding these conferences, shoot us an email or reach out to us via Ask the Desk in the news desk. U.S. economic calendar for the week. As always, you can see the colored red, which are the Fed speakers. We do have on tap as of right now. This will be there will be added throughout the week, but initially scheduled, you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 Fed speakers scheduled for this week. On the economic side, we're keeping a close eye on Tuesday. We have industrial production, as well as starting to get some home numbers with your NAHB housing index. On Wednesday, you have the housing starts and permits, and the base book get a better indication on individual districts and their commentary on markets. Thursday, continue with the home numbers. We have existing home sales and leading indicators. Also keeping a close eye on this Philly Fed manufacturing index. So it's not that busy of a week when it comes to economic data outside of some housing reports, which are also key when it comes to inflation. International economic data as well posted for any of our international traders, and or as of late, we've been seeing some follow through regarding some economic data on the European and Asian side into the US markets. Economic data, we are starting to see economic earnings season start to build. We are seeing some big names. As always, we do bold out some of the bigger names that we are watching throughout the trade exchange side. So we do have earnings season starting and slowly building. Fear and greed index continuing on the extreme fear side with a print of 21, one of the lowest prints that we've seen as of late on this fear and greed index. Moving on, looking at your weekly sector performance, seeing strength this week in consumer staples, financials, and healthcare. Keep in mind, we did have earnings season start with the financials, so we'll see if that continues this week with Bank of America and Goldman Sachs. Weakness throughout in consumer discretionary, technology, utilities, real estate, and energy, as with the weakness in crude oil. So we'll see how this goes on for next week. But we do see a few different names, sectors that have popped up on the strength side the past week. And it's a comparison, as always, compared to the COVID trade level. Basically, you're seeing a lot of indexes looking like a possible base trying to be built at these levels. So we're going to keep a close eye if anything is broken that could start to see weakness from the initial COVID drop. So we're watching these indices closely to see if there's any follow through in any direction. Looking at your target rate probabilities, clearly the mindset is for a 75 basis point hike. We are around 97.2% on that mindset. So clearly that has been being priced into markets for the past few weeks. I think we've been seeing above 50 for the past few weeks in regards to a 75 basis point hike. So we believe that this is slowly being priced or already being priced into markets. On your 10-year constant maturity, still at a minus spot 48. Year-to-date returns saw a little strength in the VIX, a little weakness in nat gas, some weakness in heating oil. We did see a weakness in the energy markets, nat gas, heating oil, gasoline, crude oil, still green on the year. We did see some strength in a few commodity players. Corn saw some strength. A lot of weakness, though, in coffee. So we did see weakness continuing in coffee across the board, down almost 10% on that side alone. Your AAII investor sentiment survey, it's not that much of a move. The bullish is still around the low 20s, with your bearish mindset mid 50s, neutral mindset low 20s. So we're seeing the bearish side still taking over across the investor sentiment survey. Not as bad as what it was a few weeks back, but we are still seeing a bearish mindset across the board. Taking a peek at your sector outlook weekly. As always, energy is the only player that is higher year to date. All other indices weaker. As always, communication services, real estate, consumer discretionary, information tech always have been at the bottom four, and they continue to stay there with weakness continuing in that area. IPO lockup expirations, you have on Wednesday, JCSE. Some expected IPO openings this week. Keep in mind, members, this does change as the weeks go on. So we're keeping a close eye on IPOs as we've been seeing new issues, IPOs, seeing a lot of volatility as of late in markets. Your FDA calendar on Monday, you have a data presentation scheduled for CANF. Thursday, Friday, and Saturday as well. You have a few company schedules with data presentations that we'll be following and as always, updating in the news desk. Now, going to take a quick peek at some charts and then we'll open it up. As always, we do a few questions that were emailed to us, the basic ones that are done every week, but we'll go through a few charts. Then if anyone has any questions, just shoot us an email or via the chat text. First, we're looking at gold. No changes to this chart, members. We mentioned last week to watch the 1700 support level, which was broken. We hit a low and ended the week basically at lows at 1650. So we are watching this level, see if the level could be possibly built here, but we're watching the upside downtrend move with 1700 as your resistance level now on gold. SPY, we extended the previous downtrend as we did hit a new low at this point. We mentioned last week we were keeping a close eye on support levels that were tested last week in the 350s range. We did bounce off that support level to end the week at 357.63, right by that resistance level. See these levels that we had drawn at 350? We bounced off of that support and ended the week at that resistance level. So we are watching that 350s support on the SPY, as well as this downtrend for a possible move to the upside. Looking at your NASDAQ daily, we added a new support level at 10,000. Who would have thought that that would be the next level that we'll be watching? But that level, once that support level was broken, we did see that weakness, and we are watching that 10,000 key level support as the next level on watch. When it comes to NASDAQ, there is a large range on a downside upside move. So we could see a lot of volatility between 10,000 to 11,000 unless one of these levels is broken. So we're keeping a close eye on NASDAQ moving forward. A quick peek at SPX via some moving averages. One interesting thing that we've noticed is the long-term moving averages are really not seeing that much of a move lower. All short-term moving averages are seeing negative crosses across the board. We also saw a double cross here, which we're keeping a very close eye on, because whenever we see one of these double crosses, typically we could see a strong move in that direction. So we are watching this one closely to see if we have any upside move for a triple cross upside. We'll be keeping a close eye on that on the S&P 500. Triple Q daily on the moving average side as well, all basically showing a negative momentum across the board on your triple Qs. Resistance and support levels are broken. Trend lines are currently broken. So we're watching triple Qs very closely for any indication move. IWM daily, this is the one chart that we're looking at to see if we're building a very similar move as of last time. We're watching this support level. If this is broken, this changes. So we're watching this very closely. If the IWMs can continue to build this little base here for an indication move to either direction once that support resistance levels are broken. 10-year yield weekly with moving averages all across the board, bullish on your yield side. A 10-year yield weekly on a chart side with support resistance levels. This chart, no change to this chart. We broke above the 4% resistance, hit 4.08%. We closed right at resistance levels. So we'll see how this adds up for this week. We've seen 11 straight weeks in a row of green on your 10-year yield. So this strength continues, trading right off of this trend line. This chart hasn't been changed in 10 weeks, probably. With your support resistance downtrends. So this is just a pure technical move that we're watching on your 10-year yield. Diamond Daily, we are watching this, as we watch as well, the moving averages are all negative, trading in that range as well. We'll be keeping a close eye on your diamonds, DIA. IWM weekly, and no changes to this chart. IWM continues to show resilience in recent market activity. The volatility is not there that we're seeing in other markets. We mentioned last week, we still see 160s as a key support level. We are watching the pattern from end of June to beginning of July. This right here as a possible indication for a next move. A break to the upside, you could see that nice strong move. But if that downside is broken with that 160 level, you could see easily 140s. So we are watching the IWM very closely, as this has been one of the stronger areas in the market as of late. HYG dailies with the moving averages. The euro, 36 weeks of weakness in the euro on this downtrend. So we are watching that parity level at $1. This correlates to the US dollar strength we've been seeing. And as always, we've been saying the yield markets with the US dollar is giving that volatility and weakness to markets overall. So we are watching a lot of indicators to give us a coordinated move to the upside. One of them is the euro strength with the US dollar weakness. Currently, we are watching that $1 parity level for a possible move to the upside. Your VIX weekly continues, not much activity at all. It's very weird when you have a 5% move in a day, intraday, that you don't see extreme moves on the volatility index. So as we mentioned in the beginning, when this does break in either direction, we believe we could see one strong move in markets overall. Oil, no change to the chart, and oil ended the week right at support levels. Right on. One thing we did add this short-term downtrend. We put that in the end of the comments as just a very quick indication if we get a break to the upside. But other than that, no change to the market. We did see a close right at support here at the 85s level. We will see how oil presents itself this week. US dollar, no change to the chart. We continue to keep a close eye on the US dollar as we believe it is one of the key indicators for this volatility in markets. We are watching a 110 member to the 114.5, 115 level as a range trade trying to be built. Any indication of a break below this level or a break above this, we could see a very strong move in either direction. Lastly, Bitcoin. It seems like no one talks about Bitcoin anymore. At one point, it was one of the biggest news headlines across the board, from crypto to the Dogecoin to Cardano. And now I don't think I've heard someone discuss Bitcoin outside of social media in quite some time. So without those headlines, Bitcoin is barely making a move. We saw an initial trade above the 20,000 level, but without any momentum, traded back below 20,000 and continues to trade in that 18.5 to 20,000 range. So that's your week and review, members. We will keep it radio silent, but as always, we do have a few questions in regards to our thought process for the week ahead. On our side, members, what we'll be watching clearly is going to be earnings. We have, a lot of names this week, some really big names that we're keeping a close eye on. You have on the bank side, you have Bank of America and Goldman Sachs. You have Netflix, which is always in the headlines. Tesla, what can you say about Tesla? Tesla's always, every single day, it's being played. TSLA Tesla. You got some of your big communication companies, Verizon and AT&T, and you have more airlines, American Airlines and United Air. So we are going to be watching earnings very closely this week. On the economic side, we'll be watching industrial productions on Tuesday. All the housing numbers. You have your Philly Fed manufacturing on Thursday, leading indicators as well on Thursday. And as always, members, these Fed speakers. Keep in mind, like we said, these get added and added on a day-to-day basis. So always check the news desk for an updated list of who is set to speak. But it just continues. So the initial mindset on all Fed speakers is still hawkish. So we always keep that in mind going into a Fed speak. If we see that negativity in markets continue, or eventually they will be non-market moving, because people will eventually think to themselves, okay, clearly the thought process is hawkish. No surprises are going to come during these Fed speaks. So it will be eventually all priced in going into the next announcement. But members, like we said, earnings, these housing numbers are key, Fed speak, and anything, as always, from overseas. It seems like we have a buffet of things that we have to be watching nowadays, even for our US markets. You have US markets, let alone we have our worries with economic data, earnings, and Fed speak. Now we have to watch Europe in regards to their energy crisis, their possible recessions, UK in regards to their gilts, their economic data. Now we have to watch China now, because of China starting to do their COVID policies again. What's going to happen in China? And on top of that, we have the Ukraine-Russia conflict on a day-to-day basis. So members, as we always say, when it comes to anything on a long-term, do your due diligence. There's thousands of names in this market to be watched and played on a day-to-day basis. Never fall in love with a stock. But for now, there are days where you just have to sit on your hands, let the market do what it needs to do. But we try to present you some information throughout the day on some market moving info. Hopefully that helps you out. So we're going to go a little radio silent. If anybody else has any questions, we're going to check the emails in regards to some of the questions, and we'll be back momentarily. Someone has a few questions in regards to the service, and they asked if we will be doing any webinars during the, following the earnings, and going over any of the aspect in regards to what the TradeXchange service is all about, and breaking down some of the SEC filings and options. Yes, members, we are working on a webinar. We're just trying to figure out the best time and day in regards to that. We are working on a live stream to go over the news desk, the information that is provided in the news desk, the squawk, even going over some of the charts that we present on our weekend webinars. So we are waiting to see the thought process on the scheduling. We do not want to go during earnings season. That's one of the things we wish we could have done a little bit earlier, but we are looking maybe at the end of earnings season this time around to have one webinar in regards to the technical analysis we go over on the weekend webinars, as well as the information provided in the news desk. So if you have any other questions, we're going to go a little radio silence real quick. One question we had is, why do so many Fed officials give so many speeches? In all aspect, we don't know. It seems weird to us that there are so many Fed speeches. As of late, there's been 15 to 20 more, even more each week. So we ask ourselves that question every single time. Why the constant talk if it's always going to be the same thing on a market aspect where traders focus on what they're saying, and we are seeing that volatility in markets. Not sure why there are so many Fed speeches. Not sure why there are so many Fed interviews or media interviews, but clearly they do affect markets as of late. In the past, they would have no effect on markets, Fed commentary. And there weren't that many in the past anyways. But as of late, it seems to be 15 to 20 each week. And they are affecting markets, which is why we post typically any and all commentary with a link to their speech if it's available in the news desk. So our members can have an opportunity to see and hear what is being discussed. But when it comes to that question, the honest answer is I don't know why they have so many meetings, why they not meetings, correction, why they have so many speeches, so many media interviews. Is it a way to try to calm or change the mindset of traders if they see a vicious move to the upside and they think that the market is starting to price in a shift? Do they have to come out and realign the thought process? Possibly. But when it comes to that, we really don't know. And it clearly is affecting markets on a day-to-day basis. One clear one was the other day when the market was trying to, on Friday, we saw strength in the open. Then Fed commentary came out and the market, ended weaker. So we are watching it. We watch it on a day-to-day basis. And we always recommend our members to keep an eye because they do affect markets overall. So it seems like that is the gist of the webinar for the week. We want to thank everyone, as always, for joining with us on the webinar, on our streams. We will be, as always, this should be recorded and we'll be posting it into the news desk and our social media. Thank you, everyone. Enjoy the rest of the weekend. Check the news desk to get yourself ready for Monday morning. TradeXchange out.